Welcome back, everybody, to Andy the Banker. Now, today was an interesting news for me. All right, and I woke up with amazing news. The reason why is because Microsoft, as you can see here, I have 74 shares of Microsoft. It's a big chunk of my portfolio, and they announced of amazing news of increasing its dividend by 10%. And not only that, they're gonna buy back their own stock shares by $60 billion. So as you can see here, I have 74 shares. And this news reported by Investopedia right here is that to buy back your own stock by $60 billion, that will result in less Microsoft stocks being sold in the market. And what happens is that when the supply goes down, the existing shareholders will benefit because it will boost up the stock price to go up since the supply of the Microsoft shares have gone down. And not only that, right, not only that, it has a 10% dividend rate. So what does that mean? So currently, the tech giant gives out 75 cents per share. However, based on this new news with the 10% hike, it's going to be giving out 83 cents per each Microsoft share. Now, I just want to show you guys here a little bit about the type of I just want to show you guys here the type of dividends I've been getting from Microsoft itself, right? This is essentially this month in September. And in this month in September, I got $22 here on one of my brokerage accounts, $52 in another brokerage, $69 in another brokerage. To have a 10% dividend increase, that means for the next quarter that's going to be coming up in December, I will be getting 10% additional money from Microsoft just in dividends. And this money right here, this money that I'm getting $22, $52, $69, this is all dividends. This is money I didn't need to work for. I didn't have to put a clock in to get this money. It's essentially excess money that Microsoft has earned, and they're passing it along to the shareholders. And this is just an amazing way for me to build my wealth. I am just sitting idly, passively, while the dividends are going up, while this company keeps on building upon its revenues, its cash flows. Now, you might be wondering, why would Microsoft make such a crazy move like this? Why would they spend so much money buying back their stocks and giving a quarterly dividend boost? The reason for this is because Microsoft is having a lot of pressure from investors currently. What's happening with Microsoft is that they're in the race to build their AI infrastructure, and the costs to build up their infrastructure, it is so much. They're spending billions and billions of dollars. As a result, a move like this from Microsoft shows investors that they have the cash flow power, they have the revenue power to still spend on investor dividends, investor buyback programs, and also keep on increasing its Microsoft AI infrastructure spending. Now, when we look at the stock Microsoft, it's trading currently at a $435 right now. And I've had this stock for a while, you guys. I've had this stock ever since 2020. Currently, my average cost on the stock is $338 per each share. I have about 74 shares. It is currently 55% of my portfolio. Now, people keep on asking me, why do I invest in Microsoft? Why do I have so much money in there? Why is it a big chunk, big majority? It's because Microsoft is a company, like the time that I've been invested in it, at least, it was able to predictably build up its earnings and cash flows and revenues. Now, what do I mean by this? When we went through COVID era, a lot of the companies during that time, they actually lowered their guidance, lowered their revenue goals. However, not with Microsoft. They were still able to build up their revenues and their business even during a time like COVID. And this is one of those companies that even if we happen to have a next recession, it's a company that I believe in because the majority of the way they make money is through reoccurring revenue. Through subscription businesses, through enterprise, where, for example, let's say we do have some sort of a recession. What is the business going to do? Are they going to really cut off their data cloud business? Are they really going to cut off their Microsoft Outlook? Those are the things that are so vital for Microsoft. And it's an amazing business where they're just able to collect monthly rent, reoccurring revenue. Now, when it comes to another news on the market that's been happening today is a lot of investors on CNBC have been talking about the federal rate cut that's coming up on Wednesday. Now, why is this so important? Is that there are two camps currently. One camp is the one that believes that we're going to have a 25 basis point rate cut, and the other one believes that we're going to have a 50 basis point rate cut. All right. I personally, in my opinion, I am in the 25 basis point rate cut. However, why is this important? It's because I'm trying to use this as a buying opportunity currently. What's happening is that there's a lot of people that seem to be believing that we might have a 50 basis point rate cut. And if I am correct, if my opinion is correct, and they actually only do a 25 basis rate point, I am expecting those people that bet on the 50 rate basis point rate cut to be a little bit upset, to sell out of those companies. And during that time, during the red market like that, I will be using that as a buying opportunity. It's rare for me to use it to time the market like this, but in rare occasions where it's just a few days off, I am happy to hold off on buying the stocks on Monday and rather buy it on Wednesday after I find out about the rate cut. Now, worst case scenario, let's say I am wrong and we actually do have a 50 basis point rate cut. Now, in that particular case, I am still going to buy more of the stock. All right. I don't mind if the stock goes up, stock goes down. I am still buying because all the money that I have in my current portfolio, I'm not going to be needing this anytime soon, you guys. Like I'm not going to be taking the funds out in a year, in 5 years, in 10 years. I'll be using this money essentially for decades to come. I'm 27 years old right now. I have about 3 or 4 decades to invest left. Now, you guys might be wondering, why do some people want a 0.5% rate cut and other people want a 0.25% rate cut? And it's because there are certain companies that really benefit from rate cuts, companies that use a lot of leverage. For example, if you happen to be one of those investors that invest in, let's say, a Rivian, or a Tesla, or like one of those solar roof panels companies, then in that case, you do want rate cuts to happen. Why? Is because the rates really impact those companies big time as compared to another company. For example, when you buy a Rivian car, when you buy a Tesla car, most customers that buy a Rivian or Tesla, or any other car company, they typically borrow money, get an auto loan to buy those vehicles, those assets. Now, when that happens, the rate cuts have a huge impact on that, because when you're borrowing and you get a 0.50 basis cut, then that makes a huge difference on your monthly payments as compared to, for example, a company like Starbucks, right? Even though you cut the rates for Starbucks, most customers, when they go into a Starbucks, they don't need to borrow money to buy their coffee. They don't have to take out a loan, as compared to a company that is more leveraged, a company like a solar roof panel, a company like home builders, where they will really benefit from a lower rate cut. And that's why some investors who really invest in those stocks, in my opinion, I'm thinking that they're hungry for rates to keep on getting lower, because the lower the rates get cut, the cheaper those products become. And when it becomes cheaper, the companies themselves have a more leveraging power to eat on the prices. They can increase the prices, for example, on a Tesla, because they know that Tesla prices have gotten lower, not because of what the company has done, but because of the rate impact it has. Another point that you might wonder is like, why does Andy the banker, why does he want just a 25 basis point cut rather than a 50? It's because the worst scenario that could potentially happen is that once we do a 50 basis point, we have to go essentially another 50 or 75. I can't see us going 50 and then 25 basis point cut. Once we're at 50, we have to go the course. That's why, as a result, I like starting with 25 basis points because it gives you options. For the next rate cut in November, you can do another 25 basis point, you can do another 50 basis point. It doesn't look that bad. Like it makes the Fed look like they're still in control as compared to, let's say you do a 50 basis point rate cut, and inflation happens to be rising again. So now you do a 25 basis point cut, or worse, that inflation gets really hot and now you have to start raising rates. You don't want the Fed to be in a place where they're next month lowering it, next month increasing it. That is not a stable economy, essentially. That is why it's, for me, I don't think it's that bad to just cut it small, and then we go incrementally up, rather than, let's say we do 50, the next one we're basically expecting another 50. All right, because I can't, if we do a 50 this rate cut in September, I can't see us doing a 25 basis point cut in the next one. Now, I know I'm not invested in Apple as much anymore. I have like less than one share in this company currently. I consider myself basically out of Apple. But today was an interesting day for Apple because Apple went down by almost 3%, right? And it went down 3% because of lower iPhone 16 demand. Now, I get it. I can see people being worried about this revenue increases. However, even though I have sold out of the stock, as I think to myself, the next phone that I'm going to be buying personally, I even though I don't see huge changes in the new iPhones, I'm thinking I'm still going to be buying an Apple phone. Why is that? It's because if I were to switch to another phone, although they may be having better features, it would take me so much time and effort to transfer over all my videos that I make from my Apple phone into, let's say, for example, a Google phone or a Samsung phone, an Android. Because of that, the moat that Apple has, it is so strong, man. It stops people like me who, I don't think the phone is that good, but I'm still gonna be buying an Apple phone just because of the Apple moat that they have. If it was not for the moat, I would have switched. But because everything that I have, everything in the ecosystem works so perfectly, all the apps that I have, when I transfer it over to a new phone, they will all automatically transfer over within minutes, essentially. And that is the type of ecosystem that Apple has that makes people like myself keep on buying Apple phones, even though we're not somebody like myself. I wouldn't consider myself a huge Apple fan anymore. Thank you so much, you guys, for watching. If you liked the video, if you could leave a like, that would really assist with the video being recommended to other people. Besides my YouTube, feel free to also check out my TikTok as well, where I post daily videos on essentially just reactions and thought process I have on the stock market. And I will see you next time, you guys. Thank you so much. Have a good night.